Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm not like completely all together here. Having a slow start to the morning. Markets throwing us a curveball today. I mean, so this is kind of start of the home stretch. We got this end of month period here, and then we're into December, and then it's, you know, off to the races or whatever it is. Make your fund look good before the end of the year. So we'll see how that goes. I don't know if it's going to be positive or negative. But this morning, instead, by the way, let's do some music here. Instead, the markets are concerned about what's going on in China with widespread protests over COVID mandates occurring. So let's come over here, check out the markets. Hold on a second. I got like a bunch of these windows didn't open up on the right screen for some reason. I don't know what's with that. Let's just move those over. Let's just fix that real quick. There's one more. Where is he? There's another one hiding somewhere. Close that. Oh, Discord shouldn't be over there. See how discombobulated I am? Okay. Here we are. Oh, and we do have some rollovers today too. Oh, it is telling me to roll over the main treasury. So let's do that. Okay, so, man. Morning, Atlas. Good morning, Mashun. I am so sorry. Hold on. Okay, now we're working. Okay, so yes, like on Friday, had a pretty big rally in the treasuries here. Now giving up some of that here this morning. So it seems to me that problems in China could disrupt supply chains and mean higher inflation. Perhaps why the treasuries are selling again, but not too hard yet. S&P 500 you can see giving up most of the gains from the 23rd. It was last Wednesday. So basically back where we were. Oil pushing lower. A lot of the oil demand is from China, so that's why they move so aggressively relative to China. Gold and silver maybe taking a little bit of a hit too, because a lot of the demand in those is expected to come from China. And then copper was most certainly down, right? Yep. Although recovering, down, but recovering here this morning. And then Bitcoin taking a bit of a dive, and the dollar moving down. So this is where it gets kind of weird, right? Is the dollar is moving down, the dollar is getting weaker. And instead of that resulting in buying in the treasuries, we're getting selling in the treasuries as well. So the market is throwing us a little bit of a curveball today because of the situation in China. And understand, I mean, I think to most of us, it just sounds like, oh, you know, it's an interesting headline, stuff's going on in China, I hope it works out, right? But you gotta realize that this is like the closest that China has ever been to overthrowing the communist government. Like straight up, this is the closest they've ever been, right? because these protests are widespread now in the major cities. People are doing this in the streets all over the place. Like, this is bigger than Tiananmen Square from what I can judge. I'm not an expert on China, but that's what it looks like to me. And I don't know how that turns out. I mean, the communist government has a pretty tough stranglehold on the people there, but we'll see. Something happens, but I think that is why markets are acting in this kind of strange direction. Also, some other things going on. I'll post some stories here for you subscribers in the Discord chat. One story already on Zero Hedge that I think is interesting. I'm just gonna come here to Zero Hedge real quick and see if there's any new stuff. New Twitter signups hit all-time record. Of course. Okay. But that's about all they've got over there. I'll make sure our news squawk is on. There were not a whole lot in way of data this morning. We do have at the top of the hour President Lagarde speaking, so that will probably be an event. Dallas Fed Manufacturing Business Index at 8:30, and then much later today we have a bunch of bill auctions, 6-month and 3-month bill auctions. We got plenty. Oh, and then after that we have Bullard and Williams speaking. So I don't know how much activity we'll get here in the treasuries. It does look a little slow at the moment, but we do have some headlines that could potentially move us later in the day. Somebody popped into Discord overnight named Seth. That's funny. They're like, wait, is this somebody else or what's? You think Lagarde will shake? I don't know. I mean, the last few times that we've seen her speak, we didn't see that much significant movement in the markets, did we? But if I recall correctly, they did move, didn't they? Yeah. Well, I think you had just missed it, Kyle. So it looks to me like the market is throwing us a real curveball today, because today we have treasuries down, dollar down, right? So before, dollar coming off was like signs of, possible recession coming on. Dollar comes off, market rallies, treasuries sell. Or sorry, not that. I got that all wrong. I'm not up to speed yet. Okay, give me like 30 minutes. Normally, what we've been seeing here is the dollar goes down and everything else buys. Dollar goes down, you buy treasuries, buy equities. The strong dollar has been like just absolutely brutal for the markets, right? So this morning, dollar down. Overall, the dollar is down. Sorry, you can't really see it from this chart, but the dollar is down. See that? We were up at 106 before. Now we're at 105. Okay, we're having a rebound, but the dollar was down. Okay, but the treasuries are down as well, and all of the markets are down. And why is this? Well, probably because of the protests in China. So there is like, okay, so first of all, if there was like a revolution in China, okay, that would probably be bad for the world economy. Unfortunately, in the long run, it'd be great. Listen, Chinese guys, I know that none of you guys watch this stream anymore because it basically everything gets locked down in China now, but don't let us stop you, okay? Don't hold back on our sake. In the long run, it'll be a great thing for the world if we can get rid of the communist government, or even if we just got rid of Xi, okay? But in the short term, yeah, it's probably, I mean, it's not going to help supply chains. It's not. So, and since supply chains have been one of the biggest drivers of inflation, yeah, I think that it makes sense that you would see the treasuries sell as well off of all of this. And furthermore, China is a big driver of food inflation in the world. So I think one of the things that we're probably going to see is probably a lot of the inflationary measures kind of cool off, but food inflation does not. And again, China being in revolution probably doesn't help. Probably doesn't help on that front either. And meanwhile, like, where's the money going? It looks like to me like it's going into the 6J. Although they have retraced a large part of the overnight move in the 6J. It's because long yields are flattening. Well, so generally speaking, the tendency has been that if the treasuries go down, we flatten, and if the treasuries go up, we steepen, right? But yeah, I mean, this whole situation that we're seeing right now kind of suggests flattening, I guess, like that the Federal Reserve will have to adjust policy. Yeah, I don't think we've heard this one before. I'm looking at my camera and it's still a little off. That's a little better. You know what? I never found that other ZB. There you are. Come over here. All right. Well, while we're sitting here, Kyle, I promised you. Are you still there? I promised you we could look at something. I don't know if we can like full on program it here live. But I do think I have something that can help, that'll help you do that trick. Tempted to buy the dollar, but fearing it will drop further. I think that, well, so we didn't have any morning news. I think that we probably aren't going to see too much significant movement until the equity markets start to come in. So I think we can, well, I don't think we need to make a call like just this moment, okay? Okay, what was I need to find an indicator that has, I think, the thing that will, the trick that you need to do your robot. Sorry, was it? Well, no, maybe it wasn't Kyle that was looking to do the robot. Maybe it was, I forget. I can't remember. No, it wasn't you. Okay. But I still want to go find it. It was this Renko bar timer. I think. Yeah. Basically, you have something that you want to run, not just when the bar updates. Then we need to create this timer thing. So here they start the timer, or they create it, and then there's this timer event processor object that gets attached to it. Minus equals, oh, sorry, plus equals right here. Timer event processor. That's what we need, and then that you can check key presses. Because that was Lucas. That's right. It was Lucas. Okay, we will wait until he comes in then. Have it open. I bet. Let's see. Oh. Maybe it's different. You use a key preview. Have to screw around with it later. I'll leave the thing open though. Not a lot of volume coming through here, the treasuries. I mean, there was some movement on the open. It was selling, but let's see here. News statement from the White House as protests break out in China over government's zero COVID policies. Says the White House, we've said that zero COVID is not a policy we are pursuing here in the United States. And as we've said, we think it's going to be very difficult for the People's Republic of China to be able to contain this virus through their zero COVID strategy. For us, we are focused on what works, and that means using the public health tools like continuing to enhance vaccination rates, including boosters, and making testing and treatment easily accessible. We've long said everyone has the right to peacefully protest here in the United States and around the world. This includes the People's Republic of China. That is actually kind of a really bizarre statement to come from the White House at this time, isn't it? Not what I would have expected to hear. Anthony Crew Deli 30 minutes ago. No, 13 minutes ago. Coming off a long weekend, it's important to ease your way into the week. You may feel excited to be back, but you're not in rhythm. Yeah, probably. It's true. I have to say, like, you know, I knew that the start of this week was going to be a little weird because we have like rollovers and everything. You know what, by the way, I'm looking here. I am still on ZBZ2. Let us check here. To the March future. I pull up the March future. Okay, I think that we should switch over. Totally forgot about doing that. I totally knew that like today was a rollover, but I didn't even think about switching these. Yeah, let's switch them. March. The end. March. Okay, ZBH, ZBH, ZBH. Okay, cool. So days like today, the order flow can be a little tricky because the rollover, right? FTH says not much volume on the March contract. Well, there's more liquidity in the March contract, that's for sure. But you say there's not much volume. Well, there's not much volume in the Treasury complex overall at the moment. So something that I've found to be the case is that order flow is easier to trade at the beginning of a contract. So like these first 3 days, it's a little iffy, but then after that, once we get into December, you know, Treasury becomes a little bit easier to read. But today, you're still going to be seeing some rollover. It's going to be a little weird. Not a lot of volume rolled over before the holiday weekend. So I think you're going to see a lot of it today. I think you're going to probably see a lot of it today. So where we go from here, who's to say? I'm just kind of warning you about trying to take a read just based on something you're seeing in the order flow. Today might not be the day to do that, right? And that the volume might seem a little iffy. Like it might seem low, it might seem like it moves on little to no volume. That sort of a thing. So we should be careful about that stuff. I feel like I'm missing something. Well, so we don't move the micros over yet. We don't move the E-minis over yet either. Now, I think I'm good now. I'm not quite sure. I feel a little like I'm forgetting something. Maybe that's just because I've kind of been a little bit behind all morning, though. But that's okay. They're giving us some time to come in and see what it's doing and not have to, like, freak out about trying to chase it or something. You think it's an update in the Treasury? Well, it's I think it's going to be a tough call in the Treasury, to be honest with you. I think that the overnight flow has been to the downside, and you could see that like on the open they also sold. I guess I have some other reasons, but that's probably, I don't know. So I have like the Discord channel, and I'm posting some things in the Discord channel. I need to work out how to work that, because we have it used to be that the subscribers got the indicators, but you guys decided that you would rather just pay a one-time thing for the indicators, which has been working a lot better, actually. It's been good. And so like, what should I give subscribers of the YouTube channel? Sneak peeks and stuff like that? I don't know. I wish that YouTube had tools were a little bit better in that respect, but you know, I would like to at some point have a newsletter, like a daily newsletter that you read first thing in the morning. But that's kind of hard to pull off, because I'd have to wake up a lot earlier to do it. Chicago Union now wants $25 per hour minimum wage. Okay, good luck with that. Our government can't get anything done on topics where Democrats and the GOP disagree. Everyone understands that situation. Our government also can't get anything done on topics for which there's 100% agreement, such as banning TikTok, and the press doesn't ask why. You know why. That's Scott Adams. Can we talk about this? I'll tell you why. I'll tell you why TikTok is such a difficult issue. Oh, by the way, we are getting some accelerated selling here. So hope you weren't long. We're not back to 3.7 yet, though. Not quite. I think that it's because the politicians want to ban it, but I don't think that the people want TikTok banned. And I think that the politicians are rightly worried that if they come in and they ban TikTok, that it will be a big problem for them. Not just because everybody's addicted to it and they want to be able to continue using it, but the reality is that China is not doing anything that like the United States is not already doing, right? Like, our applications don't take nearly as many permissions and everything else, but I don't think it really matters. Like, the reality is the government knows so much about you now because of what they've been able to pull out of social media. So if you're concerned about governments using what you post on social media, you know, I wouldn't be concerned about just TikTok, right? I'd be concerned about every social media platform. And I think that if you ban TikTok, that people start asking that question. And I don't think that they want people to start asking that question. You get what I mean? I don't mean to be like, I guess I'm kind of venturing into like forbidden territory here. But come on, we all know it. We all know it. China's, the only difference here is that it's China doing it. Well, things like Mastodon may be different. Elon Musk saying that we need to encrypt private messages. Sure, that would do it. That's another good one. But I find that interesting that that's what Mr. Adams is focused on this morning. What the heck? Forbes magazine, these are the top Cyber Monday rowing machine sales going on now. Act now to save hundreds of dollars. Nah, the only kind of rower you should get is a Concept 2, and they're expensive. I don't know why they're so expensive, but they are. I don't know, guys. So they came down there pretty quick. I would expect a little bit of a, I mean, they kind of ran into a little bit of a roadblock there, I think, at 11.5. Only about 1,800 contracts on the new contract have traded there. I would have expected a little bit more of a bounce after that. So now that they've come down, the treasuries are looking kind of heavy. So the volume in the treasuries might be iffy. But we should still be able to find some opportunities here in the micros, right? Maybe. Jimmy Oreo is going on about this minimum wage thing. So when I watch what Jim Oreo, I don't know if I'm saying that correctly, when I look at what he tweets about, they tend to be things that I'm interested in talking about, but that I don't necessarily talk about. And I wonder, is he really that focused on those things, or is that what he thinks Twitter will be focused on? You know? I wonder. Okay, 5-year, taking a step back, 10-year not. 30-year kind of doing it too, but not the 10-year. What the heck? Edward Lawrence tweeting, I can assure you I am not in China, nor have I been in China. Okay. Did people think that he was in there? Papyrus IQ tweeting, Jesse Livermore, there is a time to go long, a time to go short, and a time to go fishing. Hey, Tom. How's it going? I think we're getting an easy, relaxing morning so far. I don't know. Maybe I'm looking at that down move and I'm kind of like, oh wait, is it gonna continue down? Maybe there's no reason for me to do anything. We're gonna have LaGuard speak here in a little bit, so I don't think that really becomes a good, like at this exact moment, becomes a good situation to try and start a trade. I won't stream. I will spare you guys having to listen to LaGuard over me. I'm going to hear what she's saying from my news squawk and probably go from there. So what is she speaking at, by the way? Shall we come in here? Let's see her. Forex Factory is always a good way to get this information. But I need to come in here and add the euro. Okay. Due to testify before the Committee on Economic and Monetary Affairs of the European Parliament. Oh, well, that makes me that much less interested, right? They did sell there. Look, they sold in. They're hitting into 11 now. Oh. Shoot. Okay, so she's saying that they are going to set out their plan for reducing their I'm gonna wait for it to pop up on Twitter and read that to you. What I just heard was a sell treasuries for sure. It is appropriate that the balance sheet is normalized over time in a measured and predictable way. She was talking about normalizing the balance sheet. That's what caused that sell there. So that was definitely something that should be short treasuries, long rates. Can we do 695 though? Apparently, yes. Yes, we can. Incoming data suggests that wages are picking up, and we will continue to assess their implications. Jeez. Interesting. There you go. Okay. There was like a little bit of a stack at 3699, and I was like, why aren't they taking it? But they did. Well, I wouldn't normally expect to see. Well, I take that back. When the presidents of the central banks speak before Congress or, you know, their representatives, you can definitely see some movement. That was a little bit more than I was expecting, but totally appropriate given the headline. I guess I didn't expect her to say something so significant, and I felt like her leading off her speech like that was a little bit left field. You know what I mean? Like, I'm interested that that's what she decided to lead with. Now, we do stand some risk of this flipping back on us, is, you know, like, although the offers in the 10-year look good. Maybe I need to stop saying like the 10-year, and so maybe I just need to call it ZN. The offers in ZN are looking solid so far. Not too much interest at 09, and they ticked down and now hitting 08s for a new low. if this thing continues here, I feel like that the CTAs, oh geez, there you go. I feel like the CTAs in the treasury space keep getting thrashed around, right? It's like just as soon as all of the signals say to go long on momentum in it, and then you get a massive down day in the treasury. Yeah. Like I was kind of, just because of the China thing, I was leaning towards selling, and this is like really piling on. For me to get anything out of this, though, it's gonna have to continue a lot more than that, so shouldn't get too excited yet. Would have been a lot happier if I had taken that 3.69, huh? Kind of waiting to see if it finds a price in here that it likes. Doesn't seem like it's doing that yet. I guess that's why I'm a little bit on edge here, because we did get something that's definitely a sell treasuries. But at the moment, aside from like the big offers at 09.5, the market is kind of returned back to it, kind of lackadaisical, don't you think? Can see Apple share becoming quite heavy also next year. Oh, I don't know about Apple. I mean, you're gonna go short Apple. I'm not sure that that's one that would be very good. Although certainly what's going on in China right now is not helpful to Apple, right? And they've already kind of warned that it could hurt their production. And I also think that Apple is overbought being the most popular stock for sure. But that's kind of the reason why I don't necessarily think that I should go short it, is that like the fundamentals for Apple could be absolute shit and people will still buy it, right? It's kind of a different, so like, you know what I think is the most interesting situation in the stock market right now? Disney. Oh my gosh, this thing in Disney is so interesting. So of course, a lot of people were already kind of piling on Disney and didn't like the way that the company was going, because they felt that Disney was pushing too much of like this message sort of stuff. And the place where I started, of course, I like Star Wars, and a lot of the stuff that Disney has done with Star Wars wasn't very good, especially like Obi-Wan. That series was so terrible. I hated that so bad. And but you can also see the latest installment of Marvel not doing as well, right? So then John Chapek gets ousted all of a sudden, like out of nowhere, and you're seeing all these things like that. He was actually like taking making some of the properties that would have been like for streaming, he puts them somewhere else first so that they do terrible there and the losses go there instead of Disney streaming, to make his numbers on Disney streaming look better and all of that sort of a thing. So now we come to this point where it's like, okay, so Disney just got hammered in the markets. Okay, is Disney doing poor because of the woke politics, or is Disney doing poor because of its mismanagement from its CEO? And will bringing John Iger back fix that problem? The way that the investors and everything are behaving, it believes that they suggests that they believe it's the latter, because Bob Iger was totally down with the message and kind of started that stuff in the first place. Okay, so right, that's kind of the situation there, and as a result, Disney has just been absolutely pummeled. So at some point, is Disney a buy? Probably, but you don't want to be buying it while it's in the headlines. You don't want to be buying it while it's in the headlines. You want to wait for a long time, maybe several years, until everybody kind of forgets about all of this. And then whether or not you buy it still kind of depends on whether you think that it's the message that's hurting them or the management that's hurting them, right? Okay. So that's kind of the situation to Disney. Now let's go back to the subject that got us on this, which was TLA Trader saying, can see Apple share becoming very heavy also next year, right? Well, Apple is kind of a different story, right? So first of all, Apple could be going down because of what's going on in China. That's supply disruption. It's not because a large group of the public has a moral or political qualm with Apple, right? And Apple remains like popular as a brand overall. That's the problem with Disney. The problem with Disney is that it's hurt their brand. It's hurt their brand, frankly, right? Screw this iPhone, can't talk, right? I made a spelling mistake on a TikTok comment the other day, and they focused on the misspelling and not the point, and it was really frustrating. Don't let words get in the way of communication, folks. Anyways, right? So Apple continues to be a popular brand, and as such, and as the most popular stock on the exchange, probably the general consensus trade is going to continue to be any downfall in Apple is an opportunity to buy more, sort of a thing, right? So while I think that Apple is overbought, I'm not interested in shorting it. Whereas you could maybe still go short Disney right now, right? That makes sense. We're trying to predict the order flows, and the flows with Apple are a little bit different, right? So like if in Apple we get some short because of China, I think that the flows after that continue to be positive. And that's not the case that, here in Disney, it's like it's been short. And then now I think the flows after that are probably going to be short. Continue to be short. At least until people forget about it and it's no longer the punching bag in the media. So I wouldn't be looking to catch the knife in Disney, whereas I might be willing to catch the knife in Apple. Might. Actually, probably not, because I don't like Apple as a company. To be honest, I don't like Apple as a company. Okay, a little bit further of a bounce, not too much of a move in the yields. Okay, Mohammed El-Arian, you cannot rewire supply chains overnight. It takes a long time. For those companies, it means supply uncertainty. The change in globalizations means inflation will not get back to 2% quickly. Exactly. This is why I think you see rates increase. Well, whether or not the market sees that as a driving force this morning remains to be seen. But I think from like a global macroeconomic standpoint, what we've seen over the weekend supports higher rates. We have to factor in everything else too, right? Like that we could go into a recession here. That would be deflationary. Man, so I got this I know, like I'm totally left field here now, but I have this casein protein drink that I like to drink before night, and I would get Optimum Nutrition, and they were out, so I just went with the generic bodybuilding brand. And the generic bodybuilding brand is using some sort of sweetener or something that just like lingers in your mouth for a long time. So I did all this stuff, like I swished with orange juice and everything to try and see if that could like ensure that the taste would go away, and it didn't work. And I still kind of have it in my mouth even after eating breakfast. Can you believe that? And that's kind of driving me crazy at the moment. Live Squawk tweets Russian oil keeps gushing despite uncertainty over price cap. Oh, this is, I didn't even think about that. Okay, so So if oil prices are going down because less demand from China, how does that impact Russia? Oil below $70 a barrel would really hurt Russia's war effort, wouldn't it? Forbes, when's the December CPI report and what to expect from it? That's pertinent to my interests. Okay, so there were some offers at 10 at one point that have kind of fleed. They're still kind of chilling at 10 though. I haven't seen a whole lot of aggressive volume yet. Does look like that the 5-year is still bubbling up though. Okay, well, I'm gonna take the loss on that trade. I think, we had a good driver of order flow. Going for a shot with it was acceptable. Really should have been faster on that trade. If I'd been faster on that trade, maybe I could have taken $10, $15 and then just been okay with that, right? But I don't like what I'm seeing here. We're kind of come back to an area. Well, we are starting to develop like a little bit of a range here at 10, which I think is a little bit weird. But within that range, I'm starting to see the volumes turn more long, so I don't like that. Now, ECB tweeting, repeating Lagarde, saying the opening of the economy after the pandemic meant a rapid release of pent-up demand, contributing to a gradual increase in core inflation over the year. CNN announces Phil Mattingly as chief White House correspondent and MJ Lee as senior White House correspondent. That is a complete change in their reporting, isn't it? Wow. Okay. The flows that I'm seeing here are having me really question my theories for the day. So I'm thinking China, the dollar, all of that going in directions that in net are saying macro conditions are bad for inflation and sell treasuries. But the flow off of that low has been a lot stronger than anything else we've seen this morning. So it seems that there are some buyers out there. And maybe these buyers are independent of anything else that we have going on here. Well, there's finally a downtick. The funny thing is that we could probably be back at the lows in a split second, but seeing this flow come in long makes me really question that this today was, going to be a net sell day. So if I'm wrong on the initial trade, should I bother taking another one? Well, we got the S&P 500 opening in 10 minutes. Should also note that the prices that we're at are basically the prices that we had before Laguard spoke. So that was just a retracing of that, not. Forbes, former President Donald Trump spoke about his dinner with Kanye. Oh, I don't even want to get into that. I was like, oh, let's read that headline out. But now I'm like, nah, I don't want to talk about Kanye. That's just a mess. Probably shouldn't get involved in. Russia, we will propose new arms treaty talk dates. You know, like I'm on over here. So the thing that you don't want to have happen is like, say you get long at 3.7 and then there's like no volume beyond that. There was a little bit of volume beyond that. So I did pick up on something, but it just didn't have legs. Look at this, now to 12. So for the moment, it's suggesting that maybe the lungs went a little bit too far. Pivoting at 12. I suppose if I really still believed in the short, that I would want to do it here, but I'm not. I don't really believe in it anymore. Whoa, okay. Okay, I think that one, we should be careful about this. I'm seeing some pretty strong volume come into the 30-year. That behavior right there may have been a spread trade. I'm not sure that that's a reason for me to want to get in. Israeli finance panel chief suggests lot to shield mortgages from rate hikes. So the politicians are figuring out that higher interest rates really hurt people, and one of the places they hurt the most is in higher interest rates for home loans. So they're trying to find a way to decouple home loans from the rest of the market. I'm not so sure that that one's going to work out. Now all of this, like, why would I want to be into home loans? That's not going to work. Delta is negative. Well, how do you mean? How can that be? I mean, what's to say the volume seems to be, the market orders are to the upside. But we're getting a divergence. They're to the upside in the 30-year in ZB, and they're to the downside in ZN, right? And they're only to the downside in ZN in the last minute. That after they kind of stopped at 12, then the shorts came in. So that's why I'm saying this might be a spread trade. It might have been a spread trade. I don't know why the 10-year moved so aggressively there at that moment, but I'm a little bit suspicious. Otherwise, sometimes that would be like, okay, well, you were saying now is the place to go short, and then it moved really quick like that. Maybe that's a good space to try and get in. But I'm a little bit more hesitant than that, given the amount of strength that we saw on the upside. Well, yeah. Be careful to not rely too much on Delta when the contracts change. Well, yeah, the amount of change in Delta that we're seeing here this morning so far is relatively small. So that's another reason for me to be a little bit wary about it. And meanwhile, through all of this, I haven't really seen a significant change in the 6J. We are seeing a little bit more upside action in the dollar. Like at the moment, I think we can say that there's definitely stuff going on here in the treasuries. The problem is that there's just too many factors at the moment for me to really sort out what's happening and what the end result ends up being, right? So we have selling overnight because of China. We have more selling because of LaGuard. We're having buying here because who knows why. We've got a spread flattener coming in, that's been going on all overnight and strengthened a little bit there. And meanwhile, we've got the rollover. S&P 500 hasn't opened up yet. This is just I'm not sure that we have enough information to make too strong of a conclusion here. The market selling on that LaGuard comment, that was totally a driver of flows. And it did end up being a strong driver of flows initially, didn't it? It didn't follow through, was kind of the interesting thing with that. So that kind of gives me pause, because that means that there are other flows that have nothing to do with the news and everything that happened overnight that are coming through here. And because we're not entirely sure what are causing those flows, it'd be super hard to predict if they're going to continue or not, right? They looked like they were going a good bid at 11, and then they just got swamped. 786 contracts offered. The bid isn't backing down at all, but okay, there it ticked down a little bit. Gonna try zooming into the Japanese yen here. Another thing that is probably here when the equities open, we might see another move in oil. I think oil has been, well, since late overnight, there was a pretty big move in oil, but since then it's been pretty sideways. I'm not necessarily getting liquidity hole signs here at 11 and 11.5. In fact, what I'm getting instead is relatively strong bids and offers. Like, so they just took out the bid there. They were able to bid 400 back, and they sold it again. See, they're able to bid 400 back. from the wallstreetjournal.com, the class where future bosses learn how to deliver bad news. Business involves lots of tough conversations now. MBAs are learning how to have them. Oh boy. Okay, there's higher. On that one, I detected a hint of the Japanese yen rising there with it, so maybe the correlations have come back more in line with what they typically are, and treasuries are buying with the Japanese yen. Thing is, Treasury still has a long way to go before like anybody market making long is like making money. But the flows have definitely shifted, right? Also, I'm seeing the flow most strongly in the 30-year. The 5 and the 10 aren't doing so much. It's been the 30-year that's buying. Well, in terms of rates, we've only moved 5 ticks since I got out, so. Are seeing a strong opening move from the S&P 500, pushing about 15 points open. Sorry, here in the first 5 minutes, we've risen 15 points in the S&P 500. Treasuries are turning back down a little bit now. Flows in the 30-year maybe normalizing a little bit. Okay, so I saw a lot of orders shift on that uptick. So when I was saying that the offers look good, like what I'm saying is, normally if we were in a liquidity hole, or like the normal situation in a treasury would be like 200 contracts or less bid or offered at one of those prices. Like one side will be, so like right here is what you normally expect. It's like 600 on one side and 145 on the other side, right? And up until just that little spike up, that's not what you were seeing, right? You were seeing them putting like 500 to 700 on both sides. It looks like, though, that a real flow just came in there in ZN. Because they bought up from let's see here, was it 11? Yeah, they started at 11, they came up to 14. So a good 6 ticks up there. Pretty strong volume buying all the way, hardly any selling against it at all. And they just took out all of those offers real quickly. And now, well, so we're not quite to... My DOM is a little messed up because we switched it over, right? We're not to like the highs, regular session highs until 16, okay? So we got another little... Laguard saying, I wouldn't go as far as to say that inflation has peaked. So I don't think that that was them moving off of anything Laguard said. Could be wrong. You definitely saw on that move, that was the first move I think I've seen where I saw strong volume come into all three instruments at the same time. So how do you know they look? Well, so Zach, what I'm looking for is an indication that one side or the other side is unwilling to put up liquidity at a certain price. Right? So I'm looking for a situation where, you know, they're putting like less than 200 contracts. No matter what happens, it ticks back and forth. They're putting less than 200 contracts at that spot. I haven't seen that yet. That kind of means that the market makers are pretty happy so far. Market makers have been doing well in this action, right? And we haven't formed a clear liquidity hole. Maybe they're at 13.5 now. See that? It's like it's 200. It's just sitting there. Nothing's happening. Okay. Ticks up 250. Goes back down 255. It's a little bit better, but pulls and they take it. Now you're kind of starting to get a little bit of a sign of a liquidity hole at 13.5, which is a little odd. I wouldn't have expected it to be at 13.5, and I would be a little bit suspicious of it being head fake and them pushing up higher again. So what we could do in a situation like this is like do one of these. Stop limits along if they decide to go for those prices. See the offer at 13.5, not very strong. Bid, not very strong. Less than 200. Goes offer only 100, goes bid only 100. 50. Okay, now a flip. 400 and 200. Takes back down 300, a little bit of a stronger offer, but it pulls back and it's still only 100. Right? And they downtick. So John, I have seen a number of people saying like global inflation has peaked today. Or over, last night and this morning, some people were saying that. I feel like that is a kind of a little bit behind. Like when that CPI in November came out, that was when we knew that global inflation is likely peaked, right? From the Financial Times. Yeah, there was one of the analysts that was saying this though. I think that what's driving this market this morning is a different set of dynamics. I think that one of the issues that we have coming in here is that we're getting some news and movers and stuff that could have a significant impact on inflation going forward. And so far, my read is that they could suggest higher inflation. So that might not mean that like inflation goes higher and we get like another crazy wave, but it could just mean that like inflation stays where it is for a little bit. That wouldn't necessarily suggest Federal Reserve should back off, right? Once oil moves, well, but what's going to move oil up? Oil is, since the S&P 500 is opened, we are seeing oil start to rise a little bit. Oh wow, the production shortfall for Apple is expected to be 6 million iPhones. That is a problem. ECB Governing Council member Klaas Knot signals that the cycle of interest rate increases targeting record inflation isn't close to ending, tweets Bloomberg. Says protracted period needed to tame inflation. See, that's kind of more like what I'm thinking is like peak inflation. Yes, we've known that, but lower interest rates, probably not. At least that's not what I'm seeing this morning. Of course, that can all change, right? Oil stays down, CPI will stabilize. Well, I think that like when inflation was getting really bad, that and the whole Ukraine situation certainly contributed a lot to the inflation. But when I read your messages, and maybe this is just me kind of like putting words in your mouth, I'm getting the impression that you're saying that like oil, it was the primary driver of inflationary forces, and that's not really true. It was a major contributor at points, but it wasn't really what got this whole train started. And if we continue to have problems in the near future with inflation, I'm not anticipating that it's oil that's the problem, right? I'm thinking that it's going to be more issues in China and wage increases and these sorts of like third and fourth order effects, sort of a thing that continues to put pressure on it. ECB's Lagarde says that they may need to remove rates into restricted territory. Everything that Lagarde is saying here in her meeting is hawkish. Well, they're starting to go for the short side again. If I wanted to go long, this would be the spot. Like right there, bouncing off the VWAP. Maybe. Let's not say this would be the spot. I could see a lot of people wanting to try and go long here. Is this hawkish for the dollar or the euro? That's a good... Well, we're not really seeing the dollar move too much off of it, are we? Thoughts on Jerome Powell meeting tomorrow? Well, so it seems to me that the market is looking at that one. Let's see here. It's tomorrow the 20. No, it's not. Is it tomorrow? I don't even have that one on my calendar. On Wednesday, I have due to speak about the economic outlook, inflation, and the labor market at the Brookings Institute in Washington. That one, you know, I think he could say something significant, but it's later in the day. I don't know about this. That was a really rough pullback off of the highs. And like, look at the rates. They've like barely budged. They're only shifting like five ticks. Okay, yeah, it is Wednesday. But yeah, I think that one's one to watch, but it's much later in the day. So Cyber Monday. You know what? I went and I did like I didn't do any shopping. We've been sick. Oh my gosh, I almost forgot because I feel perfectly fine this morning. I mean, I had a little bit of a throat over the past week, but my 2-year-old man, he's like on death's door, practically. Oh, he's had a fever now for like 4 days, and I'm pretty sure it's the flu because his sister had the flu and tested positive for it. I think today we have to take him in because he's had a fever now for like 4 or 5 days. Now it's not COVID, it's the flu. It's the flu. So I didn't do anything this weekend. I mean, I studied and stuff, but I didn't go out and do any shopping. But I did go and look at everything online that I could. And there was kind of two things that I noticed. Was one, it doesn't look like that Black Friday went very well for retailers. And number two, the deals didn't look that good. They were all saying, oh, they're giving consumers really deep discounts to try and decrease their inventory and stuff. And I'm sitting here like, no, the prices are like basically what they always are. Like, yeah, things were on discount, but they weren't like more of a discount than I normally see throughout the year. Okay, so here's the treasuries turning up now. Actually, I think I'm gonna... Oh. That is not what I wanted to do. Wait, why is it? That's weird. Oh, okay, yeah, no, that's correct. Okay, I wanted it to be... Okay, I see what I did wrong. I wanted it to be a stop limit, like right here. Everyone is complaining about the discounts, yeah. Most people have reduced spending big time for sure. At least on discretionary luxury items, yeah. Well, 1, 11, half, and 10 continued to prove to be the most popular prices this morning. Okay, so there they finally hit my order. Oops. Okay. Come on. So I'm starting to detect hints of a little bit of back and forth volume here in between 12 and 13. There you go. After Christmas sales, bigger discounts because of over inventory, or after New Year sales? I don't know. So I was primarily interested in computer hardware. So the computer hardware is kind of an interesting spot. So I saw last generation's hardware get pretty good discounts. So if you want to go and buy like a 5600 AMD processor, I think you're getting like $150 now. So you're getting decent prices on those. Although the question is, do you really want to go for the older generation of hardware? Because you'd be stuck. The newest processor in the AMD line is a new socket type. It's an AM5. So, you won't be able to upgrade later, anything like that. So there's the kind of a conundrum there if you want to upgrade right now. But there's kind of some issues about going all in on the new range of hardware too, because I've found that the motherboards from the first generation of the tech don't carry over. Like they find some problem and they fix it in the next generation and they're not compatible or whatever. So there's kind of that problem. And then like it has PCI Express 5, but like there's like no hardware that is taking advantage of that. It has DDR5, isn't it? Or is it PCI Express? Yeah, no, I think it's DDR5 and PCI Express 5. But like, so you have to buy more expensive RAM. It's just kind of like you're paying up a lot for like a 10% increase in performance. Is it really worth it right now? Instead of like wait a year for like for the hardware that takes advantage of the new standards more, So for computer hardware, I'm not sure if it makes sense to buy something this Christmas. You know what I mean? Video cards. Now, video cards definitely came down, but I don't know. They're still kind of expensive. I was thinking about maybe getting a 1660, but it's like, well, it's cheap and it would help the stream out. But then I'm like, yeah, but we could just let's wait a little bit longer and get a 3060. Or the 4000 series was a total dud, so. So see, when I look at behavior like that, like we're seeing at 13, I'd say, okay, if they took 13 off again, I'd probably be able to get filled at 13. The volume is much more measured here. I am seeing some buying in the 5-year, but overall the volume has been much more measured on this move up. Picking a CompTIA would teach me computer hardware. If you want to be up on computer hardware, just watch a lot of YouTube videos. There's so many good hardware videos or hardware channels on YouTube. Seems like people are definitely looking forward to Powell's speech on Wednesday. I don't know how that's going to turn out. I just know that the time of day that it isn't necessarily the best for trading, but that the type of event and everything suggests that there could be significant news out of it. Thoughts on mining companies? I wish I was more into the securities analysis side of things. I do own a mining company. I am very, very interested in the long, rare metals kind of trade, but and I do own a stock. I do own Rare Resources, REEMF, which took off really, really well in 2000 or 2021. 2000. I was about to say 2001. That stock did really, really well in 2021, but then, you know, the overall market fell down, and there's a couple of things that made people a little bit less optimistic about that they'll actually be able to pull off what they want to do, and they came back. I'm still up on the position, but it's kind of been mostly going sideways now lately. Okay, so that was Fed semester. I don't believe the Fed is close to a pause on tightening. We need to see several more good inflation readings. Okay, build. What price was that? I hate it when it's gone and then you don't. Let's see here. 12 half. Okay. So I think I can still potentially do stuff there. Yeah. I think the Fed still wants a soft line. Well, of course they do. So here's a thing, you know, I've noted this before, but I should note it again because I think it's really, really important here. The Federal, you can't necessarily trust what the Federal Reserve says in this particular situation. And when I say like you can't particularly trust them, what I mean is like if you have some algorithm that reads a Fed speech and says, okay, is the language in this speech hawkish or dovish? And then you go and you make your trade based off of that, you're probably going to get screwed. Why is that? The Federal Reserve can't say anything dovish. So even if the Federal Reserve totally planned on in December actually decreasing interest rates, perhaps, or maybe not this time. Maybe the Federal Reserve thinks let's just go into a theoretical world where we knew for a fact, because we had spoken to them or something, that the Federal Reserve intends on raising interest rates 50 basis points in December, and then next year in January or March they plan on decreasing interest rates 25 basis points, right? They can't tell the market that they're going to decrease the interest rates 25 basis points. Why? Because in the short term, they need interest rates to be higher. And in the short term, they need financial conditions to be tight. And if they say anything that's even remotely dovish, that's going to move interest rates and ease financial conditions. So the Federal Reserve comes into this situation where they basically have to act more hawkishly than they really are. And they have to continue acting like that up until the point that they basically can stop. Right? So they will continue to act like this up until the point that they either reduce rates or keep rates steady. Right? So after December, maybe January, March, because right now the projection is still 50 basis points in December and then 25 in January and 25 in March, I think is the market expectation, right? Then after that, then maybe they can speak a little bit more freely, because then they're like, okay, we like the interest rate where it's at, and we can allow the market to just adjust based on the current conditions. And maybe then the Fed speaks not as big of a deal. You get what I mean? So in the interim period, you got to be a little bit cautious about getting too hawkish here. I mean, like look at what the market is doing this morning, because everything that we've had Fed semester and we've had the ECB, and they're all saying hawkish things. Well, what are the treasuries doing here at this moment? The treasuries are pushing the highs of the session, right? So not everybody has figured this out yet. The people in equity land, they're not paying attention. They haven't figured this out yet. And that's why they end up with these things like everybody gets super, super hawkish because of the last FOMC meeting, and then the CPI comes out and they're all surprised and pushed out of their positions, right? So they're not paying attention to, how do I put this without being like insulting? They're not really paying attention to the monetary policy enough to understand what matters, and they're looking at the wrong things. They're playing the old game, and the game has already changed. Okay, so that was a little bit more aggressive of a push into highs there. Why do I have that like this? It should be like this. I've kind of been looking at this like, should I be taking a trade here? Should I be going short micro yields? Well, that push into 14.5 certainly helps, but the yields aren't really moving that much, are they? John, I was not surprised at you. Good. Man, so S&P 500 had a really strong open. They're retracing that open. The volume on the downside from that open is really aggressive and is really washing out, canceling out that big down move. So are we getting a flight to safety risk off move here? A little bit skeptical of that new high in ZN, though. It's not following through very well yet. It's technically, it's like a breakout of the range, but it's not like a high for the session yet, even though it looks like that is the case on my DOM. And you notice that my micro yields aren't anywhere close to the lows, right? Well, not. They are close to the lows, but like relatively speaking, they're still haven't moved that much. DVO1 has gone down, basically. Okay, so I just heard over the news Quark another comment from ECB's Lagarde saying forward guidance not helpful at this point. Right? I think that's kind of a reinforcement of what I was just saying, right? Is that they like when you want interest rates to be low, giving forward guidance and giving everybody the insurance that interest rates are going to stay low for a really long time is really, really useful, right? But when you're in a position where you're hawkish and you may have to back off on the hawkishness, forward guidance is no longer useful. You want people on their toes at that point, right? So that doesn't mean that the Federal Reserve is going to lie to you per se, right? But you can't just read their words and use that as a gauge of the sentiment. You have to actually understand what their actual policy is. And the policy is they're going to raise rates until, and then they're going to hold them there for a long time. That's what they anticipate. And one of the things is that, like, there's been a pivot, like there has been a pivot to we're soon going to go into a situation where interest rates just stay where they are, right? But everybody keeps looking for a pivot, like that they'll have to reduce interest rates or something like that, right? Doesn't happen, and then they get all disappointed. Let's see here. Stephen Kelly on how the Fed should be thinking, communicating about the possibility of a treasury market blow up like we saw in the UK gilt market, an operation twist for treasury market stability. Joseph Wang retweeting this good note on how an operation twist could be a tool for treasury market instability without changing the stance of policy. Okay, so the thing that Joseph Wang has been, this is Fed Guy 12 on Twitter, has been saying for a while here is that the Federal Reserve has tools to address turmoil in specific markets without actually changing their monetary policy, like some people think. Because some people are taking the bet that, oh, go long treasuries because they're going to have to back off, right? When's a good buy for Bitcoin? Never. I don't. You know what? I don't think that now is the time. Now is kind of a possible inflection point, to be fair, but my metrics all still show that there's still more of this out there, and it's just kind of a question of if it will be exposed or not. You know, like that's kind of the funny thing, is that throughout this whole crypto downturn, you know, we've been finding that the whole upside had been driven by fraud, and it's just been sitting there. It's just been sitting there and until it gets exposed by something. Like this time, CZ kind of did, you know, the owner of Binance kind of did things to kind of bring things to a head for FTX. But you can't honestly tell me that you trust Binance. Come on, man. I'm pretty much every investigation on this subject that I've ever seen suggests that the vast majority of the volume that occurs on Binance is fake. Like they've basically pumped themselves into being like the top crypto exchange in the same way that Bitcoin has pumped itself up into, you know, being this leading financial asset. So the question is just, what does it take? Now the problem is that hasn't been driving order flows, right? So what does it take? Oh, wow. There's a strong bid there at 14.5. I don't think I want that anymore. You shouldn't need to do that. Maybe this one right here. Maybe I could do this one right here, or this one. And then if I'm not as lucky, Coinbase next. I mean, if any crypto exchange is actually real, it's going to be Coinbase, right? Coinbase and maybe Gemini, but I think Gemini, they're probably, their stuff is real, but they've probably been engaging in shady stuff. So it comes back. So let me share with you. Let me kind of segue a little bit different, and maybe I'll see if I can bring this back to cryptocurrency for a second. And it is fractional reserves, right? So a lot of people, I think, they have you noticed that fractional reserve banking has kind of become a trigger word? Like there's a group of people out there that they really, really hate fractional reserve banking, and they say, well, I'll tell you, the whole system is fake. It doesn't work the way that you think it does. And you know how I know that? Fractional reserve banking. Fractional reserve banking means that They only have to have 10% of the money that they're actually loaning out. So the amount of money that the banks have out there outstanding is actually far more than the actual deposits that they've taken in. Right? That's the nutty thing about fractional reserve banking, right? If you really think about it, though, from an economic standpoint, that's the only way that it could be. If you force banks to have 100% of reserves, which is to say that in order for them to loan out $100, somebody needed to deposit $100 first, right? 100% reserves instead of 10% like we use right now, the economy would not work. Why would the economy not work? The demand for things always outpaces the supply of things of capital that we've already had. The demand for capital always outpaces the supply of capital that we already have, right? Like the whole thing is, you want to grow, you want to start a business, okay? Starting a business means doing something that you haven't done before, right? You have to loan, you have to take out loans and loan money that doesn't exist yet in order to pay for a future venture, right? That's why it's all based on debt, because it's all about things that we're going to be doing in the future, right? Everybody has an idea. Everybody has well, not everybody. I wish it was that bad, but there are lots of people that would love to take out a loan for a business or whatever, and if they could do so without any negative consequences, they would, right? The failure rate for businesses, like new businesses, is extremely high, right? So what that means is that the demand for capital always outpaces the actual supply for capital. The people that have already made it and have the capital, there's not as much of that as there is people that want to make new capital. That's why they have to print it, right? That's why they have to print it. That's why you basically have to use fractional reserve banking, because monetary conditions would be too tight and we would never grow if the reserves had to be 100%. Right. The problem is, in Eurodollar futures, there's no regulation with the banks. They can do what they want. Well, okay, so I think what you're alluding at, TLA, is that the banks basically just make the money. the banks just say, oh, okay, you're gonna deposit, like for when it comes to Eurodollars, they just say, oh, okay, you have euros. Now you want some dollars, we'll just put some dollars for you in the bank, right? And they just make them up like they're on the spot. They don't have to like wait for the Federal Reserve to give it to them or anything like that. I mean, it's still a fractional reserve. Like they still have to keep within, so they still have to hold to these strict financial requirements. But the actual mechanism of how it works is the banks just change a number in a database, is what really happens. That's true, but probably not too pertinent to what's going on. Okay, so understanding what we understand now about the economy, that the demand for capital always outstrips the supply for capital, and if it doesn't, then there's a problem. Okay, then it's totally makes sense that if you saw a really, really massive rise in cryptocurrency, where it's like doubling, tripling, 10x, whatever the deal is, you would expect to come down back into their system and see a lot of debt, right? It's just like totally the way that it is, right? In order to have like a functioning economy, you need some sort of fractional reserve, right? The problem is that Bitcoin has basically been doing it in an unregulated manner. They're not, and like really, man, I've been taking this test for a Series 65. I've been studying hard. It's going to be a hard test. I think I could probably pass it today. It would be close. I want to really smash it out of the park and just know it like the back of my hand. It's a hard test. And, that's one of the small ones compared to like if you want to be a broker dealer or if you want to do banking stuff, like the regulations and everything, they're really strict. And these cryptocurrency places, they've all been doing this stuff without any kind of oversight whatsoever, which is absolutely crazy, right? And really venturing into really like what FTX did, outright fraud. Okay. So then here you got like an exchange like Binance. They use dirty tricks to take out all of their competition. They're faking volume. They basically become the largest player in the ecosystem. And then the question is, okay, so like, is all of the fraud out? Is now it's safe to touch Bitcoin? Well, I don't think so. That doesn't mean that Bitcoin won't rise. Maybe there's going to be another bull run before Binance is exposed. Do you know what I mean? You could make money on it in the short term, but like in the long run, what I see suggests that you don't want to be in the cryptocurrency market, that it's premised on fraud. Right? And I guess the bigger thing that I'm trying to say here is that I don't think you can expect cryptocurrencies to have a strong return without the fraud being involved. So the only other way that you could see a large influx of demand for cryptocurrencies is if people at large started to actively use it. And that boat already sailed. They basically crippled the blockchain so that people are more likely to hold it, which basically means that it can't ever be anything more than a bubble machine, right? So there's going to be short-term trading opportunities for cryptocurrencies, yeah, but the long-term one, should I buy cryptocurrencies? I think no. And I've moved, this channel, a lot of the initial popularity of the channel did come from cryptocurrency stuff, but I don't, even if it goes out and it's $1 million next year, I'm not interested. Just not interested. Binance Reserves has the biggest withdrawal in its history. Around 127,000 Bitcoin were withdrawn from this exchange in a single move. You have to be careful with those ones because that's often just the exchange doing stuff with their wallets and stuff. Pro Fed digital dollar. When the digital dollar becomes available, I'm definitely going to be interested in it for sure. Of course, how a digital dollar all works out is going to be a weird thing. Because the reality here is they're doing pilot programs. The central banks seem to see a use for it, but will the politicians actually go along with it? And if the politicians go along with it, will they actually set things correctly, Like the big one for me is if you're going to have a digital dollar, it needs to have privacy as its top concern, right? Well, you think it's actually going to be like Monero? Think that they'll actually do that? Because the people in charge would probably prefer that it not be that way, right? They would love just a public transaction of everything that you did to just make any kind of like fraud and money laundering almost completely impossible, right? Black files for Chapter 11 bankruptcy in New Jersey. I will say anything get passed. Well, I don't think that I really don't think it's up to them. I don't think that the Federal Reserve is sitting there chomping at the bit to get it passed. So just as an example, the head of the Minneapolis Fed, Kashkari, he absolutely hates it. And he thinks that there's absolutely no compelling reason for cryptocurrencies at all. He's not in on it at all, right? The banks, do the banks want a digital dollar? I actually think that the banks are probably somewhat ambivalent about it because they already have a system of international settlements that works really well for them. And having like a more open currency, like a bank like a Wells Fargo A bank like Wells Fargo probably really hates the idea of a digital dollar, right? Why would you ever need to use a Wells Fargo again if there was a digital dollar? And you can be your own bank. You just have a wallet out there and you don't have to go through any financial institution to do anything with it, right? They're not going to like that, right? So, and Congress doesn't even have a clue what's effing going on. Come on. Most of these people are like 60-year-olds, can barely browse the web, need to have their staffers do all of their tweets for them. You think they have a strong opinion about cryptocurrencies? Well, they might, but that opinion is basically going to come from something that somebody else told them, right? They're not capable of looking at the technology itself and looking at the market and going through and gaming out a little bit of market microstructure to try and understand how you set up the digital dollar will affect the way that the market will behave with it, right? They're not gonna understand that stuff. They're just gonna do what, you know, their favored lobbyists say. Come on, Nancy is the best doctor. Well, but how does she do that, right? It's not because she knows what's the best monetary policy or anything, right? It's because she uses inside information. That did not work out. Neither of those got filled, huh? Ward says rates are still in accommodative territory. So we did see some floats. That flow that came in after 8 o'clock was pretty strong in the 10-year to the upside. Now we're getting new highs on like nothing. Anyways, there we go. I'll hold the one. Kind of is looking like they might not fill the other one now. Oh, hey, no, maybe they do. So anyways, I guess the gist of it is that I'm saying is that Congress is probably going to do what they're told, right? So the question is, who's going to be the entity that comes in and says a digital dollar needs to be this, and this, and that it would need to be private, for instance? Well, the one that you would think would have to step in and be the one to say those sorts of things would be somebody in Congress, because they're the ones that are supposed to be looking out for us. But because they don't understand what's going on, probably we don't get represented in it, right? So yeah, Morgan K is right. It's like the WEF who comes in and tells them what to do. Does the WEF want a digital cryptocurrency? I haven't heard them say anything about that before. Would they be adamant that it needs to be private, or that there needs to be privacy on that blockchain? I don't know. It seems like it's conveniently omitted from the plans that I see. And the thing is that if it doesn't have those things, will people actually use it? I don't know. The other thing is, you got to remember that the WEF is a forum, okay? It's not a unified policy, you know. It's kind of like you can be a part of the World Economic Forum and you can make a proposal. And people think that when a speech is given at the World Economic Forum, that means that's their policy now and that's what they're pushing for, which is not really the reality. And you get plenty of people that are part of the World Economic Forum that have stupid ideas that aren't actually going to happen. It's a forum. 4 stew, 4 price. Well, the person that's proposing it might have a lot of power. But even if they have a really dumb idea, it's like... They have agreements with the UN, but what I'm saying is, where is the thing that says, we, the World Economic Forum, have decided on this policy, this is the one that we're going to push, and that all of the organizations that we control or whatever have to adhere to, and yada yada yada. It doesn't quite work like that. Or at least it's not that if somebody presents something at the World Economic Forum that means it's their policy, right? It's not even that they get some teeth. It's like, how do you determine what is the World Economic Forum's actual policy, right? Like, what was the thing that people were really upset about with the World? What was the last headline that we heard about? Oh yeah, eating bugs. So there was somebody at the World Economic Forum that said that we should feed children bugs. We all need to learn to get used to eating bugs for our protein, right? And there was a World Economic Forum with somebody, I forget who it was, at the World Economic Forum gave a presentation about this, right? Okay, so how do you determine when that becomes the World Economic Forum's policy, though? Right? So one person who's probably an idiot came out and gave a speech about it. How do you know that his speech is now representative of what their policy actually is? They come in and they have typically the way that something like that would work is you would at some point have like some statement of what our policy is, and then they would all vote on it, and if it gets a certain percentage passing, then that becomes our stated platform or whatever the deal is, right? Did they have something like that? Can you find it? Is it out there? I don't think so. I've never heard of anything like that, right? I think that the World Economic Forum is mostly just a place for rich people to share their ideas with other rich people. You get what I mean? So until then, it's just like those are opinions from people that are in the World Economic Forum. It's not necessarily their policy. Certainly, there are some things that we do know are their policy. Like we know that the World Economic Forum is in favor of globalism, right? Because that's basically why it was established, was because they said, hey, globalism is good for people. It's making the world richer. We should keep doing it, and we should support those kinds of policies. And we should help leaders understand why those policies are good and stuff. Ultimately, I think it's a well-intentioned thing. But the problem that I continue here, like again, the problem is that those people up there don't really actually know what's good for you. Yeah, road to hell is paved with good intentions. Like the whole thing is that people will come in and say, okay, like our benevolent rich overlords say that we need to put less carbon into the atmosphere. Okay, so when these benevolent governments come in and say, well, we have to make sacrifices, and people go, yeah, we do need to make sacrifices because there's global warming, and some people think it's an existential threat to humanity. It's not, but it is a serious problem that we should maybe consider addressing with policy in places. But what happens when those benevolent dictators say, oh, you and your family are one of those sacrifices that we have to make, right? Come on, man. They don't care about you. You're just this little ant down here, and they can't even. They're so far removed from what you and your daily life is that they can't even really fathom what is good for you and what is in your best interests. They think that they know that, but they really don't. it's kind of like the fundamental thing that kind of frankly makes me a little bit angry about like the entire I want to use the word woke, but really these kinds of ideas permeate all of leftism now at this point, which is that we know what's good for you and we're going to do it for you. Screw that. Don't want your help. Yeah, I want the ability and the power for me to do what's good for me, and you stay out of the way. If you really want to help people, that's how you do it. Is you empower them. You don't do it for them. Right? Yeah, there are groups of people out there in the United States and other areas of the world that have been historically repressed, for sure. And there remains some societal structures that may work against those individual people, okay? The solution to those problems isn't to come in and say, oh, these people can't help themselves, so we need to come in and give them a bunch of money and give them all of this stuff and extra advantages in order to equalize things out. No, the way that you empower them is you just empower them and get out of the way. You get rid of the thing that is maybe hurting them and then get out of the way. Do people take that approach with their kids? So I tell you what, you want to teach your kids to walk? That, I can come in and do everything that I can. Like, I can come and like move his legs and all that sort of thing, but it doesn't really actually help him. Eventually, he just walks. They just do it. They'll do it without you even having to really do a whole lot. And any time that you find yourself falling into that kind of hole, you got to sit back and say, well, but I don't actually know what's good for other people, right? Like that's too much of a, that's a bridge too far. Like the reason that we have democracy is so that people can make the decisions for what's good for themselves. I understand why the rich kind of come to these conclusions. Like, look, it's pretty hard to come in here and look at the markets and the way that markets tend to behave and all of that sort of a thing, and then say that the average person is capable of making the correct, smart decisions about how the financial system should be organized, right? No. So I wish that more people understood market microstructure, if only so that more people would say, oh, you know what, that's what this rule should be. That's probably beyond my level of expertise to be able to say. But there's a difference between that and trying to start making decisions on behalf of other groups for them and their benefit when you're not in their position. So that's my diatribe for the day. Well, since the last about 30 minutes, we've seen pretty consistent selling in the treasuries, but price hasn't really budged. So I don't know what the buying was. I don't know what the selling is. It seems like they're meeting in the middle now and exchanging. So what happens from here, I'm not sure. And I didn't really see, well, actually take that back. When we were having the rise, well, let's see here. When was this one? This spike here in particular is interesting to me. No, it wasn't really. Okay, so this spike here was probably correlated with oil spiking there. But overall, the Japanese yen has been is pushing now new downside of the session. So they have also kind of come to the upside and now to the downside. Okay, well, so for starters, that kind of suggests to me I should try and scratch this. I might have been able to scratch it at break even. That's okay. A little loss. Didn't need to. I could have put it at break even. Okay. I could decide that the selling's going to continue and try and go long here at 3.68. Not so sure. The time of the day, I don't know if it makes much sense to try and take another trade, you know? Like overall, like what I'm seeing here is like a 20 tick range. And I might be able to take 5 to 10 ticks out of that. Took one loser. That might just be it for today, because how much is it going to move in the next 20 minutes realistically? Anyways, there are definitely some things. I think that a digital dollar could be really amazing if it had the right features. You know, if a congressman wants to talk to me about what I think are the features that would be best in a cryptocurrency, I'd love to share with you. Everyone waiting on Wednesday? Nah, I don't think so. So I find it kind of weird that you guys are so focused on Jerome Powell speaking again. Like I would have thought by this point that everybody had figured out that Jerome Powell's primary goal is to like not affect the markets, and unless the market is like really directly moving opposite to what they want, and then he'll try and smack them down. That's what really happened last FOMC, right? I'm not anticipating a significant change in policy or tone from him. Plus, let's see here. Let's come back. Tomorrow we have CB consumer confidence. That's an okay number. And then we're to get like CPIs. Or no, that's a CPI flash estimate from the euro. Let me filter this better. Preliminary GDP tomorrow. ADP non-farm employment change. Or that's Wednesday, rather. Plus, we have other Fed speakers. I don't think I'd be waiting just for that. Like, if anything, seeing that maybe it's a little bit slow probably has more to do with the roll. But I guess we'll see. The other thing, oh, you know what? Here's the other thing, is that Wednesday is the last day of the month. So, like, you've got to do all of your rebalancing flow. Although I don't think that there's a whole lot of rebalancing flows in equities. But imagine having to do all of your rebalancing flow with Powell potentially going to speak later in the day and people are waiting on it. Ugh, that's nasty. Well, that probably means that the close on the whoa, what's going on here? That was some selling in the 5-year. Wow, there was about 5,000 contracts sold there in the 5-year. That does perk my interest. I don't know if it's enough to make me take a trade, though. Or rather, it's probably not enough to make me take a trade when I've only got 20 minutes left. If I was going to do it, I have to do it like right now and get filled at 3.68 long. But like, look, they ticked up. Well, what's happening there is definitely upsetting the limit orders. You see lots of like changes in level 2 here now. I think somebody just gave up on a long there. Okay. Maybe a little bit of iceberging at 13.5, ticks back up. There's definitely something selling it. Oh, I forgot about the manufacturing index. What was that? Negative 14.4 versus an expected negative 21. So not nearly as bad as feared. And that was about 12 minutes ago. Well, I'm definitely glad that I like scratched that trade and everything. It might come back to where we were, but those ugly downsides would have been bad for the market making, at least. Lizard thinks that sell in ZF was just the rollover. Could be. Would need to have the old contract up. Yeah, we are trading. So three business days before the end of the month is when you need to switch. That's when it's like first call. You can see the majority of the volume is already, the liquidity is already moved over to the new contract. I'm hopeful this March contract will be more liquid. I mean, it's already more liquid, right? Today. I'm not entirely positive we should be trading this market action. Yeah, well, I think this morning, you know, I think that we had some opportunities. I think that short that I took on the guard, speaking, for instance, was a good trade that I just wasn't fast enough on. But it seems like here this morning that the flows are too numerous and unknown for me to have like a real call on which direction we're going in here. The equities is maybe a different story. This really strong buy on the open in the equities actually surprised me quite a bit. I thought that maybe they would continue selling off or something, but I'm a little suspicious of it all. We're what, 2 weeks away from rollover? Yeah. Well, so like let's take a look at what could potentially be moving flows in equities today. Well, for one thing, it is the first day after a holiday, so traders tend to be a little bit more tepid. So you don't get as many trading flows, right? There also is some significant numbers at the end of this week. Y'all are focused on Powell, but hey, we've got non-farms on Friday, right? Now, in the meantime, we've got like end of month flows. Supposedly, there's not a whole lot of end of month flows to come in equities, though. So, do we really have super strong predictors of order flow in equities this morning? The only super strong predictor of order flow that we have is changes in the macroeconomic conditions because of protests in China. And so far here on the open, I'm not sure if those definitely affected things overnight, but I'm not sure if that's what's really pushing trade here this morning. So probably you're right. And if it was, I think that the play would be short in SPOOs, which didn't happen. So yeah, maybe you're right. Maybe it's not worth touching. The treasuries seem to be suggesting to me that something is going on. Maybe the trade is just to do some market making here. But for me to want to try and catch 10 or 20 bucks here before in the next 5 minutes isn't very realistic, right? So, and not only that, but the DVO1 here with the yields seems to have decreased. So wow, you're 110 up already? Well, I mean, if that's like your daily target, it probably is a good idea to just quit. Oil's starting to come back here. And I can see the Japanese yen maybe making a move. The Japanese yen may have turned around, so. For myself, I'm a little bit skeptical of like rates staying below 3.7. Feels like it's a little bit too early for us to be pushing below 3.7. The range is definitely 3.7 to 4.25 though. Man, I continually come back to this whole thought of like, how do you market yourself better? You know? And I think the reality is I have a lot of problems with the kind of marketing that one would typically have to do in this kind of situation. Not that all in marketing is immoral, but I think that the way that some people do it, especially when you're talking about futures trading, is probably not moral. Maybe I need a less strong word than moral, but I'm not going to do it. But I also think that at the same time that for whatever reason at the moment, I just don't feel a very strong desire to market myself. Like, you know, I used to be, oh, I've got to make a TikTok every day. I got to make a TikTok every day. And now I just kind of don't care. I just kind of don't care. You know, let the trade speak for yourself. I don't think that the trades say, like, that's the whole thing, is I don't think that the trades say a whole lot. I mean, taking the combination of your trades over a 5-year period might say a lot. But that you made money on one day doesn't mean anything. That's the thing. Well, just focus on your trades. When we're trading, that's what we need to do, and that is what we do. But the larger thing is like, okay, that's weird. 1,000 by 1,000 in the ZN now. Sorry, that's a little. I haven't seen that in a long time. So I think on this one you short 14 and buy 13.5. Like you want to get it in short first, but we'll see. I mean, the trend is down, so. Anyways, so when I'm trading, my focus is being the best trader that I can, right? But I feel like that I'm obligated for more than that, right? And I think that we've given a lot of good information on this channel. I feel that we're obligated to get that out to more people, that we're obligated to grow the channel. And that would probably include taking it in new directions at points as well. But I'm just not getting like the oomph that I've needed to make that shift and have success with it, you know? Obligated by God. Like we know things that can make society better. That's what I think. And I know things that can make trading better for those that are willing to actually sit down and listen, which isn't going to be very many people, but those that are there, you know, it's kind of hard doing this all by yourself. You kind of need to gang up a little bit. So that's why we build the community. So from both of those perspectives, so we have an obligation just to the trading community as general, but then I think we have an obligation to society at large, because I keep seeing people and policymakers make decisions based on an understanding of the market that is false. So I'm a trader in shining armor on a crusade. I'm on a crusade, yeah. I am on it. You can't tell I'm on a crusade? Come on. What's my crusade? Market's not informationally efficient. Good job, someone else. Well, while we're at it, Gary Gensler shouldn't be SEC chairman. Can we get a good SEC chairman, please? Because he really screwed the pooch on the whole GameStop thing and the FTX thing, didn't he? He needs to go. Expand on that last point. See, what happens is we come in here to the market and something happens. And then the market moves. And everybody says, well, the market is efficient. So because it moves, that must mean X. That must mean that we should do Y thing. And in reality, it was moving because it was like end of month rebalancing, or it had absolutely nothing to do with the news they were talking about, or it was more nuanced than that. And then they get led right into a trap. They go and they say, oh, the market moved, you know, treasuries sold because the Federal Reserve spoke hawkishly. That must mean that interest rates are going to rise. And then the next week, the CPI comes out, and what do you know? CPI significantly less than expected, right? And if you separate those two, if you say here are flows and here are fundamentals, I need to know what the fundamentals are doing, but that doesn't mean that all flows are driven by fundamentals, right? Then you can understand what the market is doing, right? But because we don't do that, like, people continually get caught into these traps, like cryptocurrencies. Well, cryptocurrencies have doubled, tripled, you know, over the last year or whatever it was. Dogecoin has gone up like super big time big. that must mean that I need to get into it because that means that they know something. No, it doesn't. It doesn't mean that. It was fraud. It was all fraud, guys. Right? The orders move the markets. In the cryptocurrency market, one of the biggest drivers of orders is fraud. Right? And then you go and you look at the policymakers and they have to make decisions based on all of this. Right? They make the wrong decision. They come in and they say they do dumb things like, well, we should put price caps in place. Oh, well, listen, an order flow driven view of the market says that sort of thing is stupid. You want to drive prices down, you need to give a reason for the orders to sell. And price caps don't do that. Price caps means buy it before everybody else does, because there won't be any left. You know? I think those people are in for the long run, but that's the whole thing. Is like most people come into this and they just want to make money, yeah, and they believe the things that the general public is told about the markets, and they don't ever really, you know, like what the layperson is taught about how a market works really works against you in trying to learn how to trade. Like the reality is that the market is like exactly what our first intuition says that it should be, which is that like there's lots of things that can potentially move the markets, and in order to really have an edge, you have to know something before everybody else does. Like that's the simplest explanation of it. But then we make all of these complications like, oh, there's all these patterns and we can predict it and that sort of thing. And then those price patterns don't work. So you're spending all your time looking for that because that's what people think, is that the market is informationally efficient. So I should be able to just look at the chart and do it. It's wrong. It's wrong. And so they never actually get into the more advanced knowledge that would actually help them. Right? I wonder how Bukele is feeling right now. He's a true believer. He probably thinks that he just needs to wait it out, and that next bull run that he'll make even more money. Like, here's the thing is, the whole Bitcoin bull run in 2021 was driven by fraud. What makes you think that it's going to make it to an actual new all-time high? It wouldn't have actually have made it to a new all-time high if not for the fraud. So that one's a little hairy, right? I'm not sure they want to make money. Well, they think that they want to make money at least. But I totally think that there's definitely people that it's just like the majority of people are not built out to be traders, for sure. Majority of people are not built out to be traders. That's why I structure the channel the way that it is, because I'm not interested in getting every kid that comes along that wants to make money from trading. I want to find people that are truly interested in markets and are humble and open enough and dedicated enough to do the work to understand this kind of math and how it works, and to stick and follow with what it's doing, and follow the fundamentals and make the theses about what's driving certain flows that day and stuff like that. Like that's the way that I have it structured, right? For everybody else, we can manage their money for them if they want, right? That's kind of what I think the longer term thing is. Like, I think we become an investment advisor. Not everybody's going to pass the Series 65 exam. They're just not. They're just not. I know that there's a lot of people that think, oh, well, you can manage your own finances. Well, if you're a kid, probably. Once you get older, though, it gets complicated. You have to make hard choices, You have to make hard choices. If you're not maximizing profits, I don't know if I agree with that, but I think you're getting at something else that is completely left field. Anyways, I want to continue making the channel bigger. There's only so far that we can go with just trading, but not feeling that direction. You know, like I want to make like what's the video that I want to make? Well, I want to make a video about Ninja Trader tips. I want to make that, finish that strategy PDF. It needs to be proofread and everything. What am I going to make a video about after that? I'm not really sure. Not really sure. Kind of like, you know, not feeling that motivation there in that space. Or like, should I make a TikTok every day? Not really feeling, even though I feel like it's important to make the channel continue to be bigger. So, I don't know. See where it goes. But I'm telling you, folks, what we know is important for society to know more about. It is. That doesn't mean that everybody is going to be expert traders like us, because not everybody can dedicate all the time to it. That's like the big barrier. But they need to understand that the market is not informationally efficient. They have to, the world, in order to get to a better world that people are looking for, we have to understand that first. That's the thing that's kind of holding things back, and in my opinion, that's one of the big things holding things back. Is that we look at a move in the market and we think that that's like the final word on it. It's not true. And the market is less efficient because of that. Okay. Anyways, I got to get going. So you give me your idea running dairy. I'll see it later in the stream. At a micro cap crypto. Yeah, there you go. Well, I have, you know, I have garlic coin. But anyways, see you guys tomorrow. Stay excellent, team.